Hello and welcome to Platinum Investments. So today we are going to discuss about Paytm and the share price of Paytm and why the share price of Paytm has been falling relentlessly for last few weeks and months, and what to do next in the stock, which is Paytm. So it was not so long before that the foreign investors like the JP Morgans and the Morgan Stanley and even the domestic investors like the ICICI Direct, they were recommending to buy the share price of Paytm at around 1600 to 1800 levels, with a target price of 40 to 50% from those levels. And look at where Paytm share price is right now, a 60-70% erosion of people's money and wealth which they have put in, and the share of Paytm, a relentless falling which we have witnessed in the last 6-7 months, and still the correction is going on and no one knows where it will stop. So we need to figure out what went wrong in the share price of Paytm, and we need to figure out and need to introspect and intervene the reasons behind the fall of this share price. So first of all, we shouldn't be much surprised with this fall because Paytm is, after all, it's just a startup company which has turned into a unicorn, and the management has time and again has confirmed the quarterly losses and the consecutive quarters for the last 4, 5, 6 quarters, whopping losses, and this is very obvious for any new company. And they have also declared the fact that for the coming 4-5 years, in fact, these losses are going to continue. So it's very obvious that the share price would not be performing as per the expectations of the market. And then again, there are other reasons as well. Like after the launch of the share at around 2100 level, we have seen the constant correction and the regulatory charges since then. Since we all know that Paytm is a fintech company, a payments bank, so the regulatory challenges for raising funds has been a constant factor, and also the new rules and regulations for the wallet issue again has been a challenge for raising money. There has been a slowdown in the merchant loans and also a increasing employment cost in Paytm. So these are few of the reasons that has been a reason why the share has been seeing a constant correction. The share price of Paytm reminds us of the stocks like the Coal India and R Power and so on, and even like the recent listings like the Zomato and Nykaa. After listing, there has been a constant and a relentless downfall in the share price. It looks like a never-ending downfall. So this has been a part and parcel of stock market. There will be a few accidents like this, and we have to live with it. Somebody who's desperately searching for a reason to invest in a stock like Paytm. A few of the reasons are like the Paytm has more than 450 million registered users, and $2 million was the initial investment made by Paytm founder Mr. Vijay Shekhar Sharma in 2010, and Paytm has 39 million daily active users. Paytm has generated around 36 billion rupee, which is around $510 million in 2019. Over 70 million games are played on Paytm each month, and 89% of users aged between 16 to 24 prefer Paytm. And India's payments market is estimated to be worth 1 trillion in the next 3 years, and 5 million Paytm transactions are processed every day, and 850,000 offline merchants currently use Paytm. There are 2 times more men than women who use Paytm. 70% of Paytm users have a Android device, and 1000% growth in money added to the average Paytm account which has been recorded. So these are a few of the fundamental details which the company Paytm has recorded, and we can witness this and could actually find this interesting for the company, which you can consider actually. So in spite of all the positives that we get to hear about the Paytm and the company, if you ask for our advice, it's for the short term investors, it's a strict no. You have to consider this as a penny stock. So only this is recommended for a long term investor who has a time horizon of around 5 to 7 years time. Yes, Paytm can always turn out to be a multi-bagger, but for that you need to give time to the share. As we all know, the company is going to incur losses in years to come. So the time one has to give to the company in order to perform and grow. So you have to treat it like a penny stock, and the stock price can easily slide down to another 40-50%, which is up to 200-300 rupees. So somebody who is planning to accumulate at these levels, our advice is to go slow. Somebody who's looking to average, again our advice is to go slow and enter your capital in a staggered manner in a stock like Paytm at current levels. Thank you for watching this video. That's it for now. Please like, share and subscribe. Thank you so much.